that high is Wednesday's daily high. So we're going to see that line referencing Wednesday's high because Thursday was a holiday. We're looking at this through the lens of running above that high, stopping out anyone that is short, and tricking individuals thinking that it's a breakout to the upside, so retail's going to chase that. I state in that video that I am not interested in doing anything until 9:30 open. That's interesting. So here we have the 1 hour chart. Now I want you to think about how I taught in the past market structure. And I taught how I use long-term highs, intermediate-term highs, short-term highs. I learned that concept from Larry Williams, okay? And it served me well since 1995, and I believe it's still applicable today. For instance, we have this high right here. This high is a long-term high on this 1 hour chart. Why? Because to the left of this swing high, we have a swing high that's lower than it. And to the right of it, we have this swing high that's lower than it. But then we have a high to the left of this one that's higher than that one. This is an intermediate term. This is an intermediate term high. Long-term high, intermediate term high, intermediate term high. And everything on the downside with all swing lows is basically the same thing. But we're also noticing that when we're looking at long-term highs and intermediate-term highs, when you have these large imbalances inside them, and I taught this in lectures before, people that have been listening to me that are strong students, veteran students, they know that I said this. Intermediate-term and long-term highs that have imbalances in them are going to be high probability setups because this inefficiency is going to be much more meaningful than something that may form in a short-term high like this or a short-term high like that, even in here. So this long protracted buy-side imbalance, sell-side inefficiency, that's what I used as my framework on Friday. I extended this buy-side imbalance, sell-side buy-side imbalance, sell-side inefficiency, or BISI for short. You extend that forward, okay? This is why I'm not supply and demand. Supply and demand is infancy. It's lacking a lot. It's a wonderful, wonderful beginning stepping stone, better than classic support and resistance for someone that's brand new and they're just looking for something to study and it's not my work. But if you really want to understand the marketplace, you're going to have to look at inefficiencies, order blocks, and PD arrays the way I teach it, and you need to cast them forward as far as 60 days in advance or 60 days in the past. Look back. And that frame of 120 days, the market's always dynamically referring to all of that. It's a constant continuum of referring back to those same data points. And those data points are my PD arrays, premium and discount arrays. So by extending this in the future, going through all this, we see on Friday morning, it pumped up above Wednesday's high, right here, trades above it, and goes to the upper quadrant and pierces it of this buy-side imbalance, sell-side inefficiency. These lines here, that's the upper quadrant, consequent encroachment, lower quadrant. And the low, I didn't want to put on it because I wanted you to see where that wick high is and that wick low. That's why it's no line on there. Okay, I'm just showing you the quadrant and the consequent encroachment level. So take a note of these right here, these levels, what they are. And when we drop down, you'll know what that stuff is when we drop into a lower time frame chart. And this is that inefficiency on the daily chart, or not inefficiency, but the section of price action where I said that you would see the bulk of the action for your setups that would yield the best, they would occur inside that little segment of price action. Now, right away, you can't appreciate what I just said there because you're looking at all this run up, which is the Judas swing, and you're seeing all this run down here. And that's what you as a new student or someone that's an action hound, the people that go and watch live streamers because they're thirsty, they're hungry, they want to get out there and just chase somebody else because they think they know something that they're never going to be able to learn. you're looking at all of the full range, and you're not going to be able to do that as a new student. You're not going to be able to participate in that as new traders. You don't know what you're doing. So by me teaching you a way where you can just limit your focus to, okay, this is a segment of price action. Now I just got to watch it in reference to time. And I'll talk about that in a moment. But inside this little red box here, that's that portion on the daily chart that I stated from Wednesday's consequent encroachment of its daily wick to its close. That's what this red section is here. This orange box here, this large orange box, is this BISI here. So just make sure that you take a mental screenshot of what you're looking at right here, because when we go into lower time frames, you'll get lost in the sauce otherwise. All right, before I get into it, this was the magic that Mike, I hate being called Mike, but Magic Mike here pulled off. This was, as I was looking at price, this is what I was using to frame it. I was recording it, and I used Camtasia Studio from TechSmith. And something's happened with their most recent release in their software. For whatever reason, it's happened to me half a dozen times now, where I've recorded a video and all of a sudden, either I'm doing something with hotkeys that it's sensitive to, or it's just glitching and has a bug in it. But I was taking screenshots as this trade was panning out, proving that, number one, I was in it. It was live. This whole business of going back and forth doing screenshots and then going to X, I was pausing the recording long enough for me to jump over to X because I didn't want to see my personal stuff as I was going through my web pages in the video. So by simply pausing the recording, then I can go to another tab and show the X, post the chart that I just screenshot, and then come back to TradingView and then unpause the video so live data can start coming again. Well, I think in the process of doing that, it causes me to still record, but it treats it as a screenshot on the screen. So my chart did not update after a certain portion, and I don't know how to fix that. So if anybody is using Camtasia Studio's software program like I do, I pushed them in the past, but I got to be honest with you, if this is something that's just a problem or a glitch, then I'll have to start complaining about it. But if you're using it and you've encountered something like that, or a get around or a fix to that, I'd appreciate you let me know on X. Just something I can use to overcome it, because it's not happened just on Friday. It's happened half a dozen times just in the last month or so. And it makes me angry because I put a lot of work into managing trades. I'm putting in annotations and it doesn't appear, because the recording will play up to a certain point and then it stops and it just looks like a screenshot. But then my mouse, you can see my mouse moving around, and it's going over to the buy button or the sell button, whatever I'm in. And you can see me, going up and down with the cursor where if I'm moving the stop loss, but the chart looks just like this is here, like it's a static screenshot. So I don't know how to overcome that. And it might be a simple fix. It might be something I'm doing stupid that I don't even realize I'm doing, but it is what it is. And I know I'm jawboning right now, but I want you to understand that I had this recorded, but it just doesn't have that full play out, because I was pushing the screenshots into X as it was going along. And you can see me entering up here above the Wednesday daily high and inversion fair value gap, and it drops down. Now, what you don't see here, what you do not see here, is the high of February 24th's SIBI, because that's exactly what I was keying off of. That's exactly what I was keying off of. That high level watermark of the SIBI on February 24th on your daily chart for September 2025 NASDAQ futures. That level is what I was looking at. And as it was sweeping above it, I was using the candlesticks in here. I was trading in the consequent encroachment of that candle there. I'm sorry, the rejection block of that candle. This candle's up close. Then this wick I used in this candle, I went into consequent encroachment there. And then I used the order block here, changing the state of delivery. And I went over this on X, so you can go watch that too. You can actually watch me do the execution entering in here. And you can see I left the screen like this. You can see it's not market replay. And I constantly show you that it's live data. So it's not anything fake. It's not, delayed data. It's not like Ninja Trader where you can delay the data and do all kinds of, malarkey with it. Everything is as it was happening. But more specifically, it was going to deliver as I said it was going to deliver in that little 7-minute and a few second long video at 4:50 a.m. Eastern time on Friday morning. So as it dropped down in here, it went into that segment of price action. I told you from the daily chart that this would be the bulk of where the ideal scenarios for you as students would see. So if this is a market maker sell model, in here you can do distribution, and then the low of it here, as it hits it, that's the unicorn. That's the second stage redistribution where the fastest delivery happens, and it goes boom, there it is. Okay, I was covering all this in here because my son, my youngest, who still lives with me, had an appointment at 11 o'clock in the morning, and I was not told in advance. So I was trying to babysit this as long as I could, but I had to scale most of it off and left one contract on to get to new week opening gap high. And once it pierced that, you can see it trading there. But I stated in that video at 450, I did not believe it was going to go below new week opening gap low. And you don't see it happening there. Okay, and I'll show you the full data. Let's continue on. So here's the business. Here's February 24th's daily SIBI high. That's that purple or blue line here. And there's a high level line that's just above that, right in here. And the combination of the upper quadrant of this buy side about sell side efficiency on the hourly chart, that's what that red line is. You can barely see it, but it's there. And then here's the consequent correction of this buy side balance, sell side efficiency from the hourly chart. And here is the lower quadrant level. And there's no low or high level. Remember, because I didn't want that to show up in the hourly chart in this presentation. So it's this low of the rectangle here, and the high of that rectangle is the high and low of that 1 hour SIBI. I'm sorry, BISI. So we have a confluence of the upper quadrant of that 1 hour buy side balance, sell side efficiency. It is the February 24th of 2025's daily high of its SIBI, which is the same SIBI we've been talking about for months. See how this is a key level? See how awesome it is to know that these things repeat over and over again? Contrast that with classic support and resistance. How do you know the level that you are looking at or want to see it react to? How do you know it's going to have a reaction there? You don't know that, but I know. I know that these levels are going to repeat. They're going to be extremely sensitive, especially at key times of the day. So what do we have here? The market used that portion of price action. I told you where the bulk of the volume would be coming in for movement higher or movement lower. The best setups that I teach for the classic market maker buy model, market maker sell model setups, reaccumulation. Accumulation, reaccumulation, smart money reversal. I was shorting at the very high candles using the logic that I teach with PD arrays. That's not found in Wyckoff. It's not found in any other. There's no other school of thought that teaches what I'm doing here. Nothing. I don't care what you hear people talk about and they put this crap out there on the internet. It is garbage. All that stuff is garbage. I literally am roasting them every single week, proving that this stuff doesn't exist anywhere else. So by seeing this candlestick here, after it pierces above that, I know if I'm expecting it to drop down, because all this was a Judas swing. It's rallying up there, building in a premium. And I even tweeted or posted on X and said, built in a premium ahead of a wartime weekend. What could go wrong? That was my little hint to you, because if you watched the video at 4:50 a.m. that same morning on Friday, you already knew that I was bearish. You already knew that I told you it was going to overlap the new week opening gap down here again. That up close candle there is going to be a inversion fair value gap. Why? Because it's going to go up here and drop. Look at the bodies respecting it there. See that? I know that if that happens and we rally up, it's eventually going to sail through it. If it trades back up to it again, that could be an area where I could add to the position. But this also is another inversion fair value gap. but it's the first presented fair value gap inside of 9:31 to 10 a.m. So extend that forward. Why is it going to be inversion? Because it's bearish. It's going up here to go lower. It consolidates in here. The bodies are respecting what? The lower half. That's exactly how I teach my PDA race. If you're bearish, you want to see them respecting the lower half only with the bodies, and no trespass in the upper half of it when it's bearish, and no trespass with the bodies to the lower half of it when it's bullish. It's very, very simple. That's not hard. That's not complicated. The market breaks lower outside of its 1 hour buy side balance, sell side inefficiency. And then once it does that, I want to see it start to pick up pace. Breaks lower. If you look at this level right here, this is the regular trading hours opening price on Friday. That's basically the 9:30 opening price. Right here. Right there. So from there, it rallies up. So if we look at that opening price in relationship to where the previous day's close was, and that you can see down here is 21,961.75. And that's regular trading hours closing price for June 19th, 2025. So we have a premium gap. So what is it likely to do? Pull back down to try to make an attempt to close the gap. Here's a setup inside that area I told you. That would be the bulk of every setup that you would want to look for. This easy, low-hanging objectives where you can just get in there and take something I've already taught. It trades up to the high, sells off. Consequent encroachment, consolidates, breaks lower, boom, gap closure. Draw to this minor sell side liquidity. And then we have the February 24th of 2025 daily SIBI low. And it draws down from there all the way into that level. And then keys off of that back up into that section of price action, which is basically Wednesday's closing price. And then what does it do? Sells off. Second stage redistribution. Sells off into the new week opening gap. As I said it would. As I said it would at 4:50 a.m. Here it is, doing it at 11 o'clock in the morning.